Hey, what's up? Welcome to Accounting is Business with Albert the CPA. One of Ben Franklin's most popular quotes is, "Nothing is certain but death and taxes." And Uncle Sam is here to prove him 100% right on that. So today, I want to talk to you guys about the differences between sales and profit, profit and taxable income, list out some of the most common taxes that business owners are forced to pay, and anything else that will help me to get my point across that even though it feels like it and it looks like it, that's not your money. You guys know how we do this. We start with our church announcements, and you know me, I put my eyes on notes. So, eyes on notes, real quick. If you prefer reading over video, check out the accompanying blog put together by Tiana on our site at rightchoiceaccountingsolutions.com. This is YouTube. You know the routine. Please like, comment, subscribe, and turn on that notification bell so that you can see our posts in the future. If you have questions that you'd like me to answer about your small business in particular, email us at askalbertthecpa@gmail.com or comment down below for a chance to have your question answered live on the show. Now, it won't be live, but it will be on the show. And also, please follow us on social media. We're Albert the CPA everywhere. And if we're not Albert the CPA, we're Right Choice Accounting Solutions. And those links are in the description, right? Yeah, you don't even got to remember that. Just click the link in the description. Give us a follow for more free tips and tricks and value, blah, blah, blah. Is that everything, Lauren? Yep. Cool. Let's start right at the top with sales versus profit. Let's just assume you have a $5,000 product or service that you're selling and you sell one. That literally means you have $5,000 in sales or top line revenue or top line, whatever you want to call it. It's the top area of your P&L. That's $5,000. The important thing to note about this is that ain't your money, because as a business owner, you automatically get to or have to deduct out the costs associated with generating that sale. So things like the team, the cost of goods if you're selling a product, marketing, advertising, and any other office supply type, any other expense that you incurred in generating that sale, you get to deduct it to arrive at your profit. And once you arrive at that profit, it's also important to note that that ain't your money either. After profit, you have a few other things if you pay attention, or if you like have a solid tax strategy in place. Like my favorite are retirement account contributions like 401ks, SEP IRAs, and that sort of thing. You can deduct a few other things between profit and what we call, or what is known as, taxable income. So once you deduct the additional deductions that don't play into net income but do play into taxable income, you get to that number. And the important thing to know about that number is it's not your money. I'm having too much fun. With like the catchphrase, "that ain't your money." But anyways, there are some common taxes that are calculated based on that taxable income number. So some of the most common taxes that all business owners are going to face are federal income taxes. If you're not in a tax-free state, you'll have state income taxes, and you'll also have payroll taxes. Even if you are a solopreneur, single member LLC, you'll still be forced to withhold self-employment taxes. Of course, if you have employees, you have to withhold payroll taxes for them and pay some, but we won't dive into that. That's a little bit of a conversation for a different video. The important thing to note about these taxes is just know that they're there, and just know that you have to pay them. Well, this feels like it may be a little bit of a quick video. I went right through those parts. So let me just kind of summarize real quick. Taxes are what ensure that the things that you sell, the taxable income, the profit, all of those things ain't your money, because Uncle Sam has to get his piece of everything, and that's his whole job. He has no problem seizing what needs to be seized. He has no problem freezing what needs to be frozen. He has no problem running you clean out of business if it's between you getting your money and him getting his. If you're here from social media, you probably know how often I say Uncle Sam ain't the one to play with, because he's not. He has authority to just take your bank account. So it's important to kind of play the game the way that he plays it, because he can be beat. He can be beat through the right tax strategy, through the right planning and execution. He cannot be tricked or fooled or ignored, because he's just going to win that game, and you are going to lose. So tying this all back to our example from the very top of our $5,000 sale, let's say you sell that $5,000 and you don't have any expenses that have to be deducted before it. That $5,000 is more like $3,500. So that $3,500 is your money. And the more $5,000 sales you make, the less and less you actually get to take home as your money because you're walking through tax brackets. So let's go ahead and be very strategic about planning for these things. And always remember, when you make a sale, when you get a number, any number that you have, if you haven't deducted out taxes or accounted for taxes, that ain't your money. Man, that one went kind of fast, Lauren. I like this. We kind of got right through that topic. I hope it's good. We always get to this point in the video, and before editing, I'm like, man, I hope that's good. I hope we don't have to redo the whole thing. But anyway, that's neither here nor there. We're ready to dive into our Ask Albert the CPA question of the week, and I'm going to take my eyes to my notes to read it. So, this one's a simple one. And I'm gonna just read it. I'm gonna read this because I think the notes that I took on what I wanted to say about this are pretty good. So, what are some of my favorite tax tips? That's the question. I don't have favorite tax tips. I have only tax tips. These are the only things that I'll tell anybody. And I want to make sure I list them out beautifully so that you can get it. So here we are. My only tax tips are as follows. Track everything that your business does through a separate business account. Use QuickBooks or whatever your preferred accounting software of choice is, and download a receipt tracking app like Shoebox. We use Shoebox at Right Choice. We also use QuickBooks for us and all of our clients. Depending on your tax bracket, state, and income level, set aside funds monthly to pay your estimated taxes and prepare for your end of year tax bill. Now, if you have a tax strategist, setting aside these funds will allow him to have a number to try to beat with strategy. A lot of people say 30% is the nice set aside amount, but if you get up in higher tax brackets, you're going to want to set aside even more. Ignore most of these sexy social media tax advice or tax tips, blah, 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 without consulting with the pro. Everything doesn't apply to everybody, so do not make the election to be taxed as an S corp without talking to a CPA or some business tax attorney. Do not go buy a business vehicle without talking to a CPA or, again, some type of tax attorney or EA or, a solid tax professional. I'll just say a tax pro. Don't make these types of decisions because you saw it floating down your timeline and it had a bunch of likes and the person who said it was popular. They're not accounting and tax professionals. Do not listen to them. Invest in deductible things that actually help your business continue to grow. Things that actually help your business operations. Things that you'll actually get a return on that investment from in the future. Invest in things like marketing. Invest in things like advertising. Invest in things like team training. Get the laptops or computers that you need. You need a new office desk and you need a tax write-off. Buy that office desk. Buy things that are actually going to contribute to your business productivity and not things that are technically a write-off, but you don't really need those things. I see a lot of that online. I get a lot of questions about that. Don't do it. And my most important tax strategy is hire a pro. You guys, the CPA has been in school about this. Well, we waste a couple years. I ain't gonna get into the educational system, but we have at least a bachelor's degree and 150 total hours. Most of us have our master's in accounting or our MBA. Like, we've studied this stuff. It took a long time for us to get proficient in accounting and tax. This isn't something that I can just ramble off a few tips and you're going to be able to strategically put tax strategy in place for your business. You need to hire a pro who does tax strategy, who understands taxes, and we typically are going to pay for ourselves, to be quite honest with you. So it's pretty much a place where you can't lose unless you ignore it. And honestly, I was going to try to think of like just a few that I could give you. No, that's all I got to say about it, because if I give out general information about your specific business, it may or may not apply. So let's avoid the general information and get really dialed in. If you're serious about your business, you need to get really dialed in with your strategy. your strategy. Because we have clients who have, if you were to look at them in the mirror, they look like the same exact business. We have consultants who do the same exact thing, serve the same exact target, do the same exact thing, and their tax strategies are completely different based on the overall goal of their company. So you want to make sure that you have someone dialed in for your business like that so that you can really grow it. So I guess I won't continue to beat a dead horse here because I think we got a nice little short and to the point video going. So I'm going to just do the thing and wrap this up. Always remember, accounting isn't boring. Accountants may be boring, but accounting is business.